So I'm Mark Brennan, I'm a Senior Investment Manager at Foresight, and I'm the lead manager on the Foresight UK Infrastructure Income Fund. I helped to define the strategy and launch the fund back in 2017, and my day-to-day role now is running the portfolio and delivering the investment objective. Prior to joining Foresight, I had a number of roles within the alternative investment space, including Standard Life Investments and the UK Green Investment Bank, where my experience spanned private equity, private credit and renewable energy. So the fund's investment objective is to deliver a target 5% annual income yield, paid quarterly, and we seek to achieve this through exposure to a portfolio of publicly traded investment companies that are active within the infrastructure and the renewable space. These investment companies invest directly into infrastructure and renewables projects like wind farms and schools and other types of infrastructure. And the underlying cash flows that those assets have are long-term, often inflation-linked and government-backed, and it's those cash flows that support the income target that we pay out to our investors. We see the fund as an ideal component of an ISA or a SIPP portfolio, and particularly in the context of the risks that you might see within fixed income and property. We think this is an interesting allocation for investors who are seeking that regular income. So our whole investment process is driven around trying to identify the very best investment companies within our sector. And there are probably three core ways that we look at that. Firstly, we're looking for fundamentally attractive portfolios of assets that are being carefully managed. We're looking for credible management teams that we believe can deliver income over the long term. And thirdly, anything that goes into this portfolio needs to support the overall annual target income profile and needs to support the types of correlation and volatility characteristics that we're looking to maintain at the overall portfolio level. Foresight's investment committee, which reviews everything that goes into the portfolio, has got decades of experience of investing into these kinds of underlying assets directly. So whenever we're looking at a potential opportunity for this fund, we're able to bring all of that experience to bear, and I think that's a characteristic that's pretty unique for Foresight actively managing within this space. So I think in addition to that headline target income that we seek to deliver, I think what sets us apart from a lot of other income strategies that are out there in the market is our focus on low correlation and our focus on low volatility. Because of the nature of the underlying cash flows within this sector, the investment companies that we are buying within the portfolio that we've created are capable of delivering very low volatility. So over the course of 2018, which was clearly a very volatile period of time for equity markets, our volatility was around 4.2, 4.3%, which is significantly different from what you would see in other equity income strategies, for example. I think the other point I would make in terms of differentiation is that what we are providing investors access to is a very interesting and a very high growth area of the investment world, which is renewable energy and infrastructure. And again, I think you look at other traditional sources for income, be they equity income strategies or fixed income markets or property, we're really bringing something very different, which is exposure to long-term cash flows from renewable energy projects and from infrastructure projects. And I think that's a genuine differentiator within the income world. So the first full year of the fund has been one of very strong performance, and we were really pleased to deliver on that target income yield with a 5.35p dividend per unit, representing a 5.35% yield for the first full year. So on top of that, we were also able to deliver a very strong total return for the first year of 11.65%. And again, in the context of what equity markets did during 2018, clearly a very uncorrelated year of performance from the strategy, and one that actually put us within the top 10 of all open-ended funds within the UK in 2018. So very happy from from that perspective in terms of how the fund has performed. I think the key drivers for that performance, certainly in the second half of 2018, sentiment towards infrastructure was very positive. And equally, I think throughout the period within the renewable side of the portfolio, you've seen very strong underlying asset valuation performance, which has supported our overall performance during that first year.